let's first understand what is the normal traditional costing method. So if you normally remember the way of the way of the inventory process and the accumulation of cost works in a P&L, we have direct materials, we have direct labor cost, and then we usually have manufacturing overheads, which is combined into something we call work in progress, which is usually used for valuing the closing stocks. So cost of goods sold or inventory at the end of the day. These are the three things that we usually use in evaluating our cost. So that's a traditional costing. But the problem with the this traditional method of costing related with the cost measurement and the cost accumulation is that there the allocation of cost to the individual goods is on a very rough basis, which is equally spread out to all the equipments, because in this traditional method of costing we are not really seeing at what kind of product is using how much manufacturing overheads. So every manufacturing overhead, direct materials, we can allocate based on the actual consumption, based on the recipe, based on the ingredients used in the material. Direct labor is sometimes is easy to allocate because you are using the specific labor for specific product. But if the labor is also is used in multiple products, then again it becomes a little bit difficult to actually allocate the cost onto the different products, especially when the requirements keep on changing. So the easier method of allocating the direct labors onto the product is by using a standard. Say, okay, it makes 3 hours for certain labor to work on this product and 5 hours on this product. So we allocate the cost based on those standard hours rather than trying to look at what is actually used in the product. Manufacturing overheads like the factory overheads or factory managers, the other consumption material, repair, maintenance of the machines is usually allocated over the entire production in equal terms, assuming that they are equally used. But in the real world, they are not actually used in the equal manner. Different products may use different resources in different capacity. So that's why the accumulation and cost allocation of manufacturing overheads can be sometimes wrong in terms of the product costing and the inventory valuation. But that's the traditional method. So you can say that the cost assignment is done over to the cost of goods sold, and the goal here is always to accurately cost the products. But uh, in actual costing system, we are measuring the actual direct material, actual direct labor, actual material manufacturing overheads to measure the cost. Now there are other methods also for measuring the cost, which is called the normal costing system. So we take the actual direct material, actual direct labor, and estimate the manufacturing overheads based on, let's say, previous month, previous quarter, previous years. We say, okay, how much is the manufacturing overhead per piece usually comes out, and then we use this method to allocate the to measure the cost for of manufacturing overhead rather than relying on a month by month variance. If there is a variance, then we will just take it as a non as a variant in the costing methods. So your cost and your actual profit and loss may not match anytime. Then you have standard costing method where we measure cost based on the standard direct material cost, standard direct labor cost, standard manufacturing overheads. But here we disregard the inflation in the prices, wastages in the process, or any other variances because of the changes in the ingredients, changes in the processes. So we are not taking care of those changes. We are using the standard which we have established once over a while. And in as a good practice, normally we review these standards every 6 months to see whether the the material there is any significant difference between the standard cost and the actual cost, and then we adjust the standard based on what is the reality at this point of time. So if we don't change the standard every 6 months, then we maybe costing our products based on very old data which may not be relevant anymore in the real world. So the standard costing always has to be updated, but it's a extra job which requires to be done. Now, these are the measuring cost, right? First, so how we as that, but there is the direct material as we see as we discussed is usually the allocated based on the actuals or based on or easily allocated to the products based on the identified, because there is a direct material, there is a direct labor, but the manufacturing overheads are something which needs to be assigned to the products. So there are two main methods of assigning these costs to products. One is functional based costing and another is activity based costing, and we are going to look at both of these methods now. So the activity based costing is designed to provide the managers with the cost information for strategic and decision making, which affect potentially affect the capacity of fixed cost. So ABC is a good supplement to a traditional system. Reason why we will see in the coming slides, because activity based costing is focusing on the activity of the product, activity that product is using, rather than allocating the manufacturing cost over the all the products equally or based on a functional method. We call it function based. So we sorry, instead of grouping the cost into functions like sales, sorry, not sales, maybe the repairs, the labor, or the other grouping of the functions like finance function or HR. Instead of allocating these a customer call center, instead of allocating these functions to the products, we which is done in the functional base. Activity based costing try to see how much of each activity, how much of these functions are used for particular product, and that we do by defining the activities which the product is using in order to use these functions. So we will be looking at how we do that in the coming slides. So the activity based costing, both manufacturing and non-manufacturing cost get assigned to the product, because it's not only the direct manufacturing cost but also the non-manufacturing cost. For example, the customer center, service repair calls, finance, HR, those may not be directly related with the manufacturing, but they also get assigned to the products, and that is a better way of estimating the product costing, because ultimately the objective of the product costing is to price it in a way that we our profit is maximized. And then there is a number of cost pools that we create in order to allocate the cost of the product, or we call them cost object. Then some manufacturing cost may be excluded. For example, if those manufacturing costs are not related with any specific activity which is identified by the activity based costing, it may not be allocated to the product at all. It may be there, we may have to incur those manufacturing costs, but we may not get allocated to the products, because they may not be directly related with the products. Rather than they may be allocated as other costs instead of allocating to the products. And then allocation bases are usually different from the traditional methods, and the overheads rate may based on the activity at the capacity. So we usually define what is the capacity of or what is the capacity, rather than changing the overhead rates every single month based on how much is the product. We say, okay, what is the total capacity of the or the ideal capacity that is we are going to use, and based on that how many activities are going to be produced by that particular function there, and then we will see what is the actual production, by actual use by the different products. So there may be underutilization of the functions, which is also easy to understand by looking at the reports. There are certain reports generated by the activity based costing. How many activities were budgeted, or what the capacity, and how many were actually used, and what is the utilization. So that helps also to understand whether we should downsize our departments or increase our capacity in certain areas based on the demand that we are having from the different products. In the traditional based costing, we don't look at the capacity of individual functions. Rather, we look at the capacity of the main constant, like for example, the machine hours only, but not by the other subordinate activities that we have to enforce. And that sometimes create over and underutilization of the functions. So the costs are treated in the activity based costing. So there is a overhead allocation and there's a level of complexity. So if let's say there is a plant wide overhead rate, they are easy to allocate, because you are now calculating the overall plant wide rate, and then just allocating that to every product that is plant is producing. So it's the easiest way, because you don't have to have much details. You just accumulate all the costs for a particular plant, and then see how many products you usually are making, and allocate it. Easy, right? Because there is no need for much of calculations. Then you have departmental overhead rates. So means every department have to have their own rates. So the finance will have their own rates, HR will have their own rates, customer service will have their own rates, logistics, supply chain, manufacturing, quality control, they all have their own overhead rates. And then we will be saying how many is the products are using these departments. And then we will be allocating based on which department is using which product is using these departmental departments, and then we will allocate based on that overhead rate. So it's a little bit of more work compared to plant wide overhead rate, because it requires you to accumulate the cost by department now, rather than by the one in the under one category for the whole plant. The more complex allocation or overhead allocation is the activity based costing, where apart from having a departmental expenses, we need to determine the cost pool for each department, how these department is being used. For example, the quality control would be saying that how many products we are checking, how many minutes it takes to do the quality control. Then the cost control department may be saying how many times or how many products are we costing. So that may be the productivity for costing control department. There may be for the call center department, how many calls we handle for our particular product. So that can be the activity for that particular department. So there are many different departments for which different activities has to be identified, and then based on the capacity of each department, we have to establish the activity rate, and then we allocate the cost. So it's a bit more complex, but it's more detailed and most accurate way of allocating the overheads.